Welcome back to the Global Business Report here on Arise News. Switching gears now to Nigeria. ARM has their half-year 2026 Nigeria Statutory Report. I find this very creative. We're going to get an answer on what this signifies, although I have a guess since it's an arrow that's moving up and you've got all these coins. But seizing reform gains beyond the recovery. So that is the conversation we're going to be having. And ARM they're seeing 11% inflation by December 2026. So happy to have Ameerat Adamu, who is Investment Research Analyst with ARM. Good to see you. Happy New Year.
Thank you.
You're welcome. You're welcome. Do have a seat. Let's hop into it here. This is very informative reports that you guys have put together. And yes, Ameerat, first thing I do want to get your take on the significance of the art with the coins and the arrow movement. What does that mean? Share the insight with us.
Okay. So in 2025, what we saw was Nigeria tasted its first, first taste of stability from since 2023 reforms that we saw. So shifting from recovery to stability. And that's what the arrow signifies. So we're moving towards positive momentum basically in 2026 and beyond. Fantastic.
Now, hopping into the report now, one of the first things that I wanted to touch on was commodities, and that is crude oil in particular. There's been a lot of focus on that. You've got a great informative chart here. Help us. And the chart looks at the consumption of crude oil by emerging markets versus developed ones. And you can see that emerging markets are consuming more than the developed ones. Maybe it has something to do with industrialization. Why is that? Why do we see more emerging markets consuming more crude oil than developed ones?
Okay, so developing markets or emerging markets, basically, they are mostly oil reliant for their economic expansion, industrialization, as you said, and basically just for their large population growth, and unlike developed nations where they have reduced their oil intensity and now switched towards diversification majorly on services-based reforms, unlike emerging markets.
Now, I'm going to read a quote from your reports, which looks at, still on crude oil, and it talks about the downside risks, all right, for Nigeria. It says, softer crude oil prices in 2026 could weigh on FX reserves, creating potential FX liquidity pressure. So flesh that out for us. That's basically, I mean, your outlook is optimistic for FX, and I know we're going to get to reserves, but talk to us about that.
Okay, so for 2026, we are projecting for our base case, a $55 per barrel for crude oil prices. And now when we look at the government have around 64, I think $64 per barrel. And that's realistic coming from what we had in our 2025 budget. But the key driver of these lower prices that we expect is the oversupply that we have in the market currently. And that's what has been driving the downtrend in crude oil prices coming from 2025 and also expected to flow into 2026.
Yeah. Okay, great. And speaking of that, the oversupply, you've had another great chart that looks at OPEC countries versus non-OPEC. I mean, the non-OPEC countries are in black, and you can see 2025 production from them 62% versus 37%. So is this essentially part of the story when it comes to the supply glut?
Yeah, this is essentially part of the story. So the non-OPEC guys like America and Brazil, they have the highest production in terms of production that we've seen historically, as you can see, unlike the OPEC plus guys, and that's what has led to the heavy supply that we have in the market and led to inventory buildup, and as a result, downtrend in prices also.
Another chart you have a trend, I think a 5-year price trend. Great, I love this chart. So you've got the spot price and the 5-year. So talk to us about this. This essentially is part of that risk for oil producing nations, right? With prices performing the way they are.
Exactly, and also goes back to the oversupply, too much heavy supply that we have in the market. And as you can see in 2025, the spot price went significantly below the 5-year average, and that was just due to the downtrend that we saw in crude oil prices, also heavy supply. And for oil producing countries like Nigeria and their peers, that does not bode well for us, because for Nigeria, most of our revenue comes from
exactly,
especially FX.
Yeah.
Exactly.
Now let's get to the non-oil side, right?
Yeah.
This next chart you have, it's got so much information on it, right? I love it because that was the recession.
Yeah.
You got non-oil sector growth, oil sector growth, real
And
GDP, which is the line there. So look, if someone was to ask you, Ameerat, can Nigeria depend on non-oil revenues, or the prospect of Nigeria being able to grow her non-oil revenues based on this chart, what would your answer be based on what the chart is saying, or what the outlook is for Nigeria's non-oil revenues?
So in terms of not focusing on oil sector or oil revenue.
Nigeria can fully, I guess, decouple, right?
Decouple oil. So realistically, soon is not possible. Not possible soon. But from this trend, we've seen that there has been divergence towards the non-oil sector, and we've seen expansion and growth in the non-oil sectors, particularly from services, even agriculture. We're seeing improvements in the agricultural sector. So if we look long term, oil sector still has a role to play.
Yeah.
It still has a role to play, but we are seeing improved contributions from non-oil sector. So we will see that gap, say, reducing or narrowing.
Yeah.
But in the long term, oil still
the chief breadwinner.
Exactly.
Let's get to inflation, and I know we've got the two charts here. This, of course, is telling us where we came from. This was, prior to rebasing, got that rebasing line, and coming out to 14.45 headline. But your next one, I do, because we're at 15 now for 2025 December.
For December.
Yeah, you see 11. Of course, you got a base, bull, and bear case, but you see 11% inflation by December 2026. Talk to us about the triggers there. Okay,
so for 2026, we expect continued moderation in inflation, and one key driver that we have there is FX stability, and as well as improve harvest and food supply, and we've seen improvements in terms of insecurity, and just take us back to 2025. What we saw in December was that despite the festive season, we still saw food price decline because we had improved supply in the market. So if that continues into 2026, we'll see inflation close the December at 11.04%. And for 2026 full year, what we have, prior to the normalization that was done by the NBS, we had 15% for average 2026. But following the normalization, we changed that, and we did our calculation again, and we have 13.07% for full year 2026 average. Okay,
great stuff. Now, let's move to monetary policy. I want to take out another excerpt from your report. It says, we expect the CBN to remain focused on preserving exchange rate stability and anchoring inflation expectations. While policy normalization is likely, we see a scope for cumulative rate cuts of up to between 100 to 200 basis points in 2026, taking the rates at between 25 to 26. So talk to us about that. Are you seeing that those rate cuts this year? Okay, so for 2026, yes. As you can see, we expect 100 to 200 basis points rate cut. And what we expect the CBN to actually take into cognizance is FX stability, also the disinflation, continued disinflation. And also for 2026, and we expect the CBN to be more cautious, basically, because we have a whole lot of factors coming into play in 2026. We have the pre-election activities, we have major risks that can come from external shocks, because we have a whole lot going on in the global landscape. So we expect them to be cautious in 2026, basically. Now, this very important topic here is going to the fiscal side now, is capital expenditure. This chart is even more busy than the other one on oil, non-oil, and GDP. But there's a lot going on. I really love it because there's a lot of information here. But we're looking at budgets, actual and shortfall. So, and the headline there, Nigeria's capital expenditure persistent budget shortfalls amid rising allocations. So why is that? Why is there this consistent underperformance in capital expenditure? And this, just for our viewers, this is what impacts them, right? Roads, bridges, and so on. So why the consistent underperformance, if you will? So there's a couple of reasons for this. So for one, we have revenue shortfalls. Right. Because
as we said, oil is our chief revenue bringer, and we've seen massive shortfall in that segment. Looking at the pro rata that was released by the MTF, MTF document, we have about 62% shortfall in oil revenue just January to July. So you see that large shortfall is one major driver of this. But we don't see enough allocation to capital expenditure, despite what we see in budgets.
Yeah.
And another one will be the implementation. So there's procurement delays, also just bottlenecks surrounding the whole capex in Nigeria.
Yeah. All right, let us round off. I said we're going to come to this foreign exchange chart. You show here FX reserves growing to its strongest level since 2018. How can we maintain this through 2026?
Okay, so let's just say, so far 2026, we've seen the reserve grow to $46 billion. Yep. So you see that's a very robust reserve and able to cover our imports and also stabilize FX. So what we'll say can build or also maintain the FX reserve, because we are forecasting a reserve to close at $50 billion for 2026. For
2026, okay.
Yeah, so we are expecting improved inflows from diaspora remittances, and also improved exports. And we've also seen lower imports, petroleum imports into the country. So that has been a major gain for us. And as that continues into 2026, we'll see FX reserve just continue growing and might reach our $50 billion
mark. Okay, exactly. All right. So we'll see if that comes through. Also, the 11.04% inflation headline for December.
Yeah.
Ameerat Adamu, investment research analyst, ARM. Thank you so much for sharing this informative report with us, and we will see how things go for this optimistic-looking 2026 for Nigeria. Thank you so much for your time.